named financial market. Hello everyone. Let us continue with our topic trading and settlement procedures. We are studying about the secondary market. Secondary market means where already issued securities, or I can say existing securities are being traded. So how these existing securities are traded, what is the procedure, how these are being settled, we will study about it. Earlier, what used to happen approximately 20 to 30 years back, what used to happen that there was a outcry system. Outcry system says that the seller who used to stand at a platform and they started outcrying regarding the securities which they want to sell. But this kind of system was having lots of deficiencies. Now, to remove these deficiencies, Government of India has started a screen-based trading. Screen-based trading means that using internet, everyone can observe that how the securities are being traded. That means it is a transparent system, transparent online system that everyone can observe that how the securities are being traded. That every investor, every participant can see the prices of all the securities. Due to that, the efficiency of information is increased. I don't have to ask anyone that what is the price of a particular share of a particular company is going on. I just don't click on the mouse. I go to the website of securities market, that is different markets are there, NSE, BSE is there, and I can see the prices. So there is efficiency of information as well as efficiency of operation. I don't want to need to move from any places. From my home, just I can on a click purchase as well as sell the security. So that's why there is a reduction of time, cost, and risk of error is there. And definitely anywhere from the world who wish to participate in the stock market, they can buy and sell the securities through brokers or members. And for this, they have to visit to the broker's office, and a computer terminal is being fixed or being prepared, and they will they will buy and sell the securities on your behalf. So let us see that what are the trading procedure. What is the trading procedure? The trading procedure, the first step in the trading procedure is that if an investor wishes to buy or sell any security, he has to find out or he has to approach a registered broker. And registered broker, that he will ask for certain documents. The list of these documents are as follows. The first of all is PAN. That PAN number, that is a permanent account number, which we are using for the payment of income tax. Income tax authorities, a person who is eligible to pay the income tax, she goes to the income tax office or post from the post office. Nowadays we can get the PAN number. That there are several authorities, just we have to fill the form and give the necessary documents. This is the one of the essential document for the trading of securities. Without this, no one can trade the securities. And let's rest of the informations are that you have to provide the date of birth and address, educational qualification, your bank account details, depository account details. Depository account details I will tell you later on, or any broker number, name whom you are registered. If you are already dealing, then a client code number is there. So all these informations are to be provided. And when these informations are provided to the broker, then broker opens a trading account. Trading account means through which buying, or the account which shows the buying and selling of securities. You are very much familiar with this trading account. That trading account we are preparing in the financial statements, preparing during the financial statements, which shows that how many goods are being sold and how many goods were being bought. Here the trading account will show that which security is being bought and which security is being sold. Then investor will open a demat account. Then investor will open a demat account with the beneficiary owner, and in this, that that's a holding of securities as well as transfer of securities with the help of this demat account. One who wants to deal in the securities has to definitely go for this demat account. Without this demat account, one cannot operate or purchase and sell the securities in the security market. Then the investor will place the order with the broker for the buying and selling of shares. He will give the clear instructions that which company's shares are to be bought as well as sold. Then a broker will go online, and he will tell that at what prices the securities can be bought or sold, and if the rate matches with the rate at which you want to purchase or sell the security, then order confirmation slip is issued to the investor. That is, if you are the investor, to you by the broker. And he connects himself to the stock exchange, match the share prices and best available prices. And when the shares are bought and sold at the price mentioned, it is being communicated to the broker's terminal, and order will be executed electronically. After the trade is being executed within 24 hours, the broker issues a contract note, and the contract note will include the number of shares bought and sold, and as well as the price, the date and time of deal. When this deal is being done, a unique order code number is assigned to this transaction by the stock exchange, and this is printed on the contract note. Now, after trading the securities, that means buying and selling of the securities and getting a unique order code, the investor has to deliver the shares sold or pay the cash for the shares bought. That means if an investor has bought the shares, then he has to pay the price. If investor has sold the shares, he has to hand over the shares to his dealer or to his broker. And when the broker will make the payment or make the delivery of shares to the exchange, this is called the pay in day. This is one of the question that describe the pay in day. So how will you describe when the broker makes the payment or make the delivery of share to the stock exchange? This is called the pay in day. And reverse of it, when the cash or securities are delivered on the pay-in day and the transaction is finalized within 2 days of the transaction, and it is compulsory to finalize the transaction within the 2 days, and the day on which the exchange deliver the shares or make the payment to other broker, that is called pay out day. And broker has to make payment to the investor within 24 hours of the payout day. If you recall, there will two brokers. I'm saying two broker. One broker will make the payment, other will make the or he will make the delivery of shares, and on the other hand, that other broker will either make the delivery of shares or make the payment. That means one broker is from the buyer side and other broker is from the seller side. So the broker has to make the payment to the investor within 24 hours of payout day, because he has already received the payment from the exchange. Now, when the broker will make the delivery of shares in the demat form directly to the investor's demat account. जब सिक्योरिटीज परचेज और सेल हुई हैं तो वो ब्रोकर के डीमैट अकाउंट में आई हैं, और ब्रोकर के डीमैट अकाउंट से फिर सिक्योरिटीज कहाँ आ जाएंगी? इन्वेस्टर के डीमैट अकाउंट में, एज इन्वेस्टर हैज टू गिव द डिटेल्स टू गेट द सिक्योरिटीज. Now, again and again we are doing that while the trading is being done, that in the form of demat, that there is no physical form, or the shares, these are not available in the form of papers. These are electronically available nowadays. So this process is called the dematerialization. That means the process of holding the securities in the electronic form is called dematerialization. So it's all for the day.